Okay, so firstly, I'm going to give you a bit of a background about the UK financial services system. So what I'd like to do is introduce you to one of the most important pillars of the United Kingdom's economy, which is the financial services sector. The UK's financial system is renowned worldwide, not only for its scale and complexity, but also for its long-standing reputation as a hub for global finance. So first, let's take a quick look at the history. The roots of the UK financial services system can be traced back to the establishment of the Bank of England in 1694. Over the centuries, London has emerged as a global centre for trade and commerce, and the city's financial institutions began to thrive, leading to the establishment of the London Stock Exchange in 1801. These early foundations positioned the UK as a leader in banking, investment and insurance, and these are industries that continue to play central roles today. Fast forward to the modern day, and the UK financial services sector remains incredibly influential. It encompasses a vast range of institutions, including large banks, insurance companies, investment firms, and a growing number of fintech startups. The sector is primarily centred in London, specifically in two iconic areas, the City of London, known for its historic banking institutions, and Canary Wharf, which is home to more modern financial institutions. However, financial services hubs have also developed in other parts of the UK, including Edinburgh in Scotland, Leeds and Manchester. Now, the UK's regulatory framework has also played a key role in shaping the financial landscape. Key regulatory bodies include the Bank of England, which oversees monetary policy, the Prudential Regulation Authority, which focuses on the stability of banks and insurers, and the Financial Conduct Authority, which regulates the UK financial services industry and ensures that markets run fairly and efficiently, protecting consumers and maintaining trust. Together, these organisations create a regulatory environment that balances the needs of innovation with the demands of stability and security. Brexit brought major changes to this landscape, and it's altered the UK's relationship with the European Union and impacting the way financial services operate between the two. Yet the UK has continued to assert itself as an independent financial powerhouse, striving to maintain its status as a globally competitive financial hub. So, to summarise this part, the UK financial services system is a dynamic and essential part of the global economy, with a long history, commitment to innovation and robust regulatory framework. It continues to adapt and grow, even in the face of recent challenges. So, the UK financial advice market encompasses services offered by professionals to help individuals and businesses manage their finances, invest, plan for retirement, and secure insurance products. Financial advisors in the UK must be regulated by the Financial Conduct Authority and often specialise in providing tailored advice to meet client-specific financial needs. So, the size and scope of the market. The market for the financial advice in the UK is substantial, and it's fuelled by increasing demand for retirement planning, investment management and financial planning services. In terms of the size of the market, the financial advice sector in the UK is valued at several billion pounds, although exact figures vary depending on source. Measured by revenue, the market size of the financial advisor industry is reportedly around £7 billion. Now, compared with the investment management industry, which has assets, or what we call AUM, assets under management, it comes to approximately 9 trillion, depending on sources, and this includes investment from overseas in the UK market. In terms of a client base, there's a significant portion of UK adults, which are typically wealthier individuals and those nearing retirement, who seek out financial advice, which creates a steady base for financial advisors like myself. In terms of products, so key products in the financial advice market include investment advice and portfolio management. So advisors offer guidance on investment products such as stocks, bonds and mutual funds, and other assets which help clients build diversified portfolios. This area is particularly popular among high net worth individuals and those saving for retirement. Then you have retirement and pension planning. So, with rising awareness about pension adequacy and changes in the UK state pension age, retirement planning is a major service. Advisors assist with pension contributions, income drawdown strategies, and tax-efficient retirement plans. Pensions and retirement income products make up a substantial share of the market as clients seek long-term financial planning. Insurance and protection products. Now, financial advisors recommend insurance products such as life insurance, health insurance, and income protection insurance. These products help individuals and families safeguard their financial futures against unforeseen events, and it makes them a staple in financial advice offerings. Tax planning and inheritance advice. So, given the complexity of the UK tax system, many clients turn to advisors for tax planning and inheritance guidance. Mortgages and property investment also form a big part of financial planning. So, some financial advisors specialise in mortgage advice, which helps clients secure finance for property purchases or to manage mortgage-related debt. Property investment advice is also common, as real estate or commercial real estate remains a popular investment fund option in the UK. In terms of revenue streams for financial advisors, so you have fees for advice. Well, many advisors operate on a fee-based model, charging clients directly for advice, either on an hourly basis, as a flat fee, or as a percentage of assets under management, which is probably the most common format. Commission on products. So commission models have declined, but still provide revenue for advisors in specific segments. This is typically when services are outsourced to another provider. And finally, ongoing service charges. So many advisors offer ongoing support and portfolio management, which generates recurring revenue from clients who need continued advice or monitoring of their investments. These ongoing service fees help advisors build stable revenue streams and develop their own businesses. In terms of market trends and drivers, so there's an ageing population. As the population ages, demand for retirement and pension advice grows. Increased financial awareness. Individuals are more conscious of the need for financial planning due to economic uncertainty and the complexity of tax and pension systems. The UK financial advice market is robust and expected to continue growing as consumers seek out specialised, regulated advice to navigate an increasingly complex financial landscape. So now I'd like to introduce you to how the UK financial advice system operates, with a particular focus on the role of holistic financial planners and financial advisors, play an essential part in helping clients navigate complex financial landscapes, including the sale of insurance products. So to start with a bit of context, the UK financial system is well structured and highly regulated industry with the goal of providing stability, transparency and support for consumers and businesses alike. It includes many types of financial institutions, such as banks, insurance companies and investment firms. Within this system, financial advisors occupy a unique position, which is acting as trusted intermediaries who bridge the gap between consumers and these financial institutions. Their role, and my role, is to provide personalised, tailored advice to individuals on how to manage and grow their finances. Holistic financial advisors are a specialist type within this advisory sectors. So unlike advisors who may focus solely on investments or retirement planning, holistic advisors take a more comprehensive approach. They work with clients to create a full financial plan that addresses multiple aspects of financial well-being, from savings and investments to tax strategies, estate planning, and of course insurance products. This big picture perspective is valuable because financial health isn't just about wealth building, it's also about protecting the assets and ensuring security in the case of unexpected events. One of the critical aspects of a holistic advisor's role is guiding clients through the often confusing world of insurance products. In the UK, insurance plays a foundational role in financial planning, providing individuals and families with a financial safety net. Insurance can take many forms: life insurance, health insurance, income protection, critical illness cover, and general insurance for things like property and vehicles. Each of these products serves a different purpose, and a holistic advisor's job is to understand which types of insurance are relevant and beneficial for each client based on their unique situation. For instance, when advising on life insurance, a holistic financial advisor will look at the client's overall financial picture, including their income, family needs, debt obligations, and retirement plans. They'll consider whether the client has dependents, such as children. The client's health profile is very important, and we'll also look at the kinds of coverage that would protect the client's family in case of an unexpected event. By doing so, they help clients select the most suitable type of policy, whether it be term life, whole life, or even a more specialised product, ensuring that it aligns with broader financial goals. Holistic advisors also play a key role in making sure clients understand the costs, benefits, and limitations of insurance products that they choose. One aspect that sets them apart is their focus on transparency and education. So rather than simply selling a policy, they explain how the insurance fits into the client's larger financial plan. And this might involve explaining the potential tax benefits of certain policies or how an insurance product can act as a financial cushion within someone's retirement strategy. So to maintain integrity and trust, holistic financial advisors operate within a highly regulated framework. In the UK, the Financial Conduct Authority, or FCA, oversees the activities of financial advisors, ensuring that they provide clear, honest and accurate information to their clients. This regulation includes strict guidelines on how insurance products are presented and how fees are disclosed. Advisors must prioritise clients' best interests, recommending products based on the client's needs rather than commission or incentives. This regulatory oversight is vital because it promotes a fair marketplace where clients can trust that the advice that they receive is impartial and designed to serve their long-term interests. This emphasis on trust is particularly important for holistic advisors, as they often develop long-term relationships with their clients, guiding them through major life events, such as marriage, buying a home, or planning for retirement. In terms of revenue, advisors may operate on a fee-only basis, earning directly from clients without commission, or they may receive a combination of fees and commissions, depending on what types of products are involved. UK regulations require transparency in fee structures, helping clients understand exactly what they're paying for and the reasons why. So, in conclusion for this part, holistic financial advisors play a crucial role in the UK financial system by offering a comprehensive approach to financial planning and focusing on personalised advice. They help clients manage their wealth, mitigate risks, and achieve greater financial security. Their work, especially in the area of insurance product sales, is not just about selling policies, it's about ensuring that clients are protected in a way that aligns with their goals and their family values. As the UK financial system continues to evolve, holistic advisors will remain an invaluable resource, supporting the financial health and security of countless individuals and families. So, in the UK, there are two types of advisors. You have independent financial advisors, or IFAs, and then you have tied and restricted advisors. So, the main differences being that independent financial advisors, when we look at scope, offer a whole-of-market advice, meaning that they can recommend products from any provider, covering a wide range of options across the market. Restricted advisors can only recommend products from a limited selection of providers or even a single provider, which can sometimes restrict their scope to specific products or firms. In terms of a product range, IFAs can access a broad spectrum of products from pensions and investments to insurance, mortgages and tax planning, based on the client's specific needs. Restricted advisors can be limited to a narrower product range, which may only partially address the client's financial needs. In terms of suitability, IFAs focus on finding the best product across the market to suit a client's unique financial goals, needs and circumstances. Restricted advisors recommend products from their available options which may not offer the widest choice for a client's particular circumstances. In terms of disclosure, IFAs must disclose that they provide independent, whole-of-market advice, making it clear to clients that they are receiving unbiased guidance. Restricted advisors are legally required to inform clients that their advice is restricted and explain the nature of that restriction. For example, are they only limited to one provider or any specific products? Personalisation. So, with personalisation, IFAs can offer highly tailored advice due to their ability to choose products from the entire market. Restricted advisors can offer highly tailored advice, but only with the options at their disposal. So, Consumer choice. IFAs are ideal for clients looking for comprehensive advice with maximum choice across the market. Restricted advisors may suit clients who prefer straightforward solutions and everything under one roof, essentially, especially if they are satisfied with the advisor's specific product range or provider. It is a highly personalised service. In terms of costs, IFAs can sometimes have higher upfront fees due to the whole-of-market approach. Restricted advisors can often have lower initial costs. So, in summary, the main difference between an IFA and a restricted advisor is that an IFA has access to the whole of the market. Regardless of their differences, both types of advisor are duty-bound to act in the best interests of the client. Advisors from both sides have the ability to be holistic in their approach. Okay, so finally, I'd like to take you through how holistic financial advisors operate within the UK financial system, focusing on their approach to financial planning, a couple of practical examples, and the supervisory regulations that ensure client protection and trust. Holistic financial advisors are unique in that they provide comprehensive advice on all aspects of personal finance, rather than focusing on a single area like investments or insurance. Their goal is to help clients create a cohesive financial strategy that encompasses everything from retirement planning and investments to tax management and insurance coverage. This well-rounded approach helps clients make sound decisions that align with both their immediate needs and long-term goals. To bring this to life, let's consider an example. So imagine a young family who have just bought a home and are starting a family, so a young couple. They might approach a holistic financial advisor to develop a financial plan that covers their mortgage, savings, insurance needs, and retirement planning. So rather than simply suggesting a single product, the advisor would first assess the couple's financial situation, their income, expenses, existing assets, and future goals. So in this case, the advisor might recommend a protective policy to support the family should anything happen to one of them in future. At the same time, they might suggest that the couple consider setting up a savings plan for an expected child's education and recommend investment options to grow that retirement fund over time. So in doing so, the advisor would not only advise on products themselves, but would also explain the why behind its recommendation. This type of guidance is incredibly valuable as it empowers clients to make informed decisions while feeling secure that their financial needs are met. In a separate example, we could look at a more complex situation. So consider a high net worth individual who runs a business and is planning their estate. The advisor might assist with retirement planning and investment strategies, but would also focus on tax efficient options for passing on their wealth to the heirs. While holistic advisors offer substantial benefits, their operations are closely regulated to protect clients and maintain high standards of integrity and security, and also transparency. In the UK, the FCA is a primary regulatory body overseeing the activities of financial advisors, and they ensure that advisors operate with the client's best interests in mind, uphold transparency, and provide clear, accurate information. One of the key requirements for advisors is they must conduct a thorough fact-find process with every client, so really get to know the client and understand their situation in full before providing any advice. And then another regulation is a suitability assessment. So advisors must document why each product or investment strategy is suitable for the client. This is especially important for insurance products, as it ensures that clients are not overinsured or sold policies that don't meet their needs. For example, if they have sufficient savings to cover minor health issues, the advisor might recommend a less expensive policy that only covers major health events, and it ensures that clients are not sold products that are unnecessary or unnecessarily costly. The FCA also enforces transparency in fee structures, and we are subject to ongoing competence and training requirements. So, to summarise, holistic financial advisors offer invaluable services within the UK financial system by providing personalised, comprehensive advice that goes far beyond individual products. Meanwhile, robust regulatory oversight by the FCA ensures that advisors prioritise clients' best interests, adhere to high standards of transparency, and maintain competence in an ever-evolving field. Thank you very much.